Is the market going to crash in 2023? I have reason to believe the answer is yes. Let's talk about what the Federal Reserve said last week. I'm kind of going to go over in a little analysis and kind of let you guys know what I think, what that means for the economy, like when you could buy a new house and stuff based off of what they said, because as we know, they are trying to be the lender and buyer of last resort. So let me get into all that and more. It's Crystal with the Cash Compass. All right, welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. If you love all things personal finance, investing, and economics, you're going to definitely want to subscribe. You're going to definitely want to hit that bell so you can be notified every time I post, because that's all we talk about here. All right, let's get into it. All right, for those who are probably new to my channel or new to this whole investing thing and government stuff, because no one really talks to you guys about it, I want to have a brief kind of overview of what the Federal Reserve is and what it is not, okay? The Federal Reserve is a private company that has the ability to create US dollars and buy whatever the F it wants to. To me, that's weird. Weird flex, but okay. All right, who are these people? Who are you? Why do they have the authority to create US dollars and loan it to us, right? Why do they have the authority to buy up pretty much the whole world? I don't know. But anyway, that's the point. They lend us money. So when you hear the government issuing out bonds, a lot of it, some of it is purchased by, average Americans or other countries, but a good bulk of it does come from the Federal Reserve. They'll tell you it's through the banks because the Federal Reserve technically cannot directly buy government bonds, but they'll do it through like your Chase or your Bank of America. So it's like they're the middleman, but it's like, cut the shit, okay? We already know what the deal is. You're giving money directly to the Federal Reserve, or the Federal Reserve is giving money directly to the U.S. government, but we're going to go a roundabout way of saying it, okay? Okay. What they'll tell you their purpose is to monitor the market and to keep things equal, right? They're looking for equilibrium. So they don't want to have inflation running too hot. So if that happens, they'll try to influence the market to either raise or lower interest rates to kind of keep the markets cool and keep employment stable. Now they have meetings periodically to basically tell you, here's what we're doing now to manipulate the world. I tend to be of the belief that the free market is going to free market if you let it free market, but when we have outside forces being a fake buyer or a fake seller, I think that's when we run into problems. But anyway, I don't want to get too deep into my personal feelings about this. So during the meeting they had last week, March 17th and 18th, I believe, they basically said, listen, we're going to keep on buying assets until at least 2023. Now, if you did not know, they're buying mortgage-backed securities and commercial mortgage-backed securities as well. So that basically means that when you're going to get a loan, whether it is for a house or if you are a commercial owner and you're trying to buy like some sort of commercial property, you're going to go to the bank to get a loan. The bank is going to take all your loans that everyone has borrowed. They're going to kind of put it into a nice little bow, boom, and they're going to sell it to the Federal Reserve, basically, right? So the Federal Reserve is basically the owner of all these assets because they have purchased these securities where the underlying asset of the security are the homes. If someone defaults, well, guess what? This security, they pretty much own that house now. So that might be good news for people who are homeowners, right? Because it's like, okay, if we're going to keep on having this fake demand for these loans, number one, there's no incentive for the banks to actually be responsible in lending the money out because the banks are no longer really holding this debt. When they are loaning you money for 30 years, they're not actually holding that loan on their books for 30 years. They're taking it and they're immediately flipping it to the Federal Reserve. So if they're doing that, what is the sense in trying to be responsible? I mean, obviously, there's still going to be some sort of checks and balances in place. You're not going to just go nuts like they did back in 2008 or 2006 type of time frame. It's not going to be just wild, free for all. But there's definitely not a lot of incentive to be super strict because they're going to get their origination fees and they're going to just flip it over to the Federal Reserve and it's no longer their problem. So if you own a house, that's really good for you because that pretty much means that housing is going to be propped up, which is their intentions, okay? They want to have that facade of growth, that facade of like everything's okay, your investments are safe. They want to keep the stock market propped up. They want to keep real estate propped up, all your assets. So they're going to keep on buying up this debt to kind of give that false impression of demand. So while it's good for those who already have a house, because then you're going to get that equity and you can tap into that equity and pull it out to make some more investments, people who do not have a home, it's going to be a struggle for them, right? And that's a predicament that I'm in right now, because I'm like, I'm in between wanting to get a house, but also acknowledging that we are, at what I consider peak levels, right? But we also have never experienced manipulation at this rate. So it's hard to tell if they're going to keep on buying. They already said 2023, okay? So that means to me, if they're going to keep on buying, and there's no limit, mind you, there's a minimum, there's a floor, but there's no ceiling. So they can buy as much as they want to year after year. They don't have to worry about a budget because this money doesn't friggin' exist, right? They just print it up or they just digitally type it in. So there's nothing stopping them from buying 80 billion this month and then next month buying 120 trillion, which I don't think is going to happen. That would be kind of catastrophic, but you get my drift. The point is, there's not really anything stopping them from becoming this whole, lender and buyer of last resort thing, because they have the capital. The capital is whatever they say it is. So for me, as a wannabe homeowner in America, I'm like, okay, do I buy it now because it seems that they're going to be doing this for years, right? Or should I wait until the market crashes? What if it never crashes, or at least doesn't crash in a traditional way, right? What if we just kind of have a whole new monetary system and the money kind of gets inflated out? I have videos on my channel. Definitely check out my my economics playlist, because I go over a lot of these things in great detail. I don't want to clog this video up because I want to keep it short and sweet, but I definitely talk about that in that playlist. And if they're going to keep on purchasing these mortgage-backed securities, and that's going to keep on keeping the prices inflated, well, when do you buy a house? Are you already priced out in your market? Let me know in the comments if you guys are priced out of your market. I personally can't afford a house, but I would really hate to buy a house and then be upside down on that house because, what I'm thinking is going to happen doesn't actually happen, right? Because on one hand, we have the Federal Reserve purchasing up all these mortgage-backed securities, but on the other hand, we have a rising 10-year yield, 10-year Treasury bond, which also influences the prices of the interest rate that they charge for homes, right? Banks tend to either borrow from the Federal Reserve or they borrow from each other, right? So if it becomes more expensive for them to borrow from each other or borrow from the Federal Reserve, they will have the possibility to actually transfer those costs onto the consumers. So you'll see higher prices or higher interest rates when you're going to go get a loan, right? Which that is actually not good, but it actually brings prices down in the homes, right? Because if the interest rate goes up, then it actually becomes more expensive to get that house, and you might price people out of the market. So in order to kind of maintain equilibrium, the prices have to come back down. So we kind of have those two things coming against each other, right? So it's like, I really don't know what's going to happen. We have the Federal Reserve buying up all these assets, but I'm still seeing the 10-year yield rising, and no one's really doing anything about that. I'm almost positive they're trying to have some sort of yield curve control, which is a whole different video. Let me know in the comments if you guys would want to know about what the yield curve control is. But that's basically them trying to manipulate the government, like the money or the interest the government pays to borrow money. So like I said, with the housing thing, I'm not sure. Where are you guys living? Tell me where you guys are located, and if you are priced out of your market. And also, do you think that this is going to continue going up or going down based on what I just explained? But let's move on to inflation. Now, a couple weeks ago, Jerome Powell, which is like the chair of the Federal Reserve, was basically like, listen, we're going to have inflation, whatever, get over it, like it's happening, it's here. And the markets did not like that, okay? So then he totally backpedaled in this last meeting, and he was like, well, it's going to go up just a little bit, and then it'll go back down. Like, there's nothing to worry about. Like, everybody's going to be fine. It's cool. It's great. Which is like, of course you're going to say that. Everything is all mind games. If you tell people there's a recession, they're going to act like there's a recession, and that's going to further cause a recession, right? But if you give everybody the impression that everything's okay and it's lovely and it's fine, well, then people are not going to worry. So I think he was just doing a lot of damage control. But no matter which way you cut it, inflation will rise. If you have the Federal Reserve putting all this money into the economy, mind you, they don't even work. It's different if there's a lot of money coming into the economy, but there's a lot of production happening also. But imagine if someone just gave you $1 million a year. I don't know about you, but I'm not working anybody's job for what? A lot of people feel that way. They'll probably spend their time traveling, shopping, like doing whatever they want to do. which is why I think UBI could be dangerous. But again, that's like another topic for another video. But if you just keep on putting this money in there with no productivity, to me, that's going to cause a situation where we don't have a lot of goods, a lot of services, but we have a lot of excess cash. That's what causes inflation, right? Like all this extra money, but not enough products and produce to kind of like absorb some of that cash. They keep on saying inflation is 2%, but I think we should do our own research and see what it is. Like maybe you have a couple of different grocery products that you look at and you're like, okay, well, in 2019 I paid $2 for that, it's now $5. Like, we should do our own calculations, because I could tell you, I already know for a fact I pay more than 2% than I did last year. Absolutely. Some things that I buy in particular have gone up at least 20%. Like I've noticed that myself with my own eyes. Okay, so I don't know where they're getting this number from, but the fact is we have to acknowledge it, right? Because that's what they're using as their measurement. So, but regardless, they said it's 2%. They're gonna keep on going until it gets hotter than 2%. But I don't know where it's actually going to be. If we look at shadow stats, it kind of it computes inflation based on how the government used to calculate inflation. So I'm gonna just throw a chart up here so we can see what they say it is. Which, let me see. All right, so this is shadow stats, and as you can see, they're saying it's, maybe somewhere around 5% is the actual inflation, whereas what we're told is the official one is like just under 2%. But if you go based on the way they used to originally calculate it, which is this blue line, baby, we have 5, okay? We have 5. So they said until substantial progress is made in the markets that they're going to continue buying. So what does that mean? That basically means you have a rich uncle, helping you or enabling you. I don't know which one you guys want to call it, because everybody has different opinions. In my opinion, it's absolutely enabling and creating an extreme dependency on the government. You see people getting crazy over these stimulus checks. They want more. They want free rent. They want extended unemployment benefits. They want all these different entitlement benefits, which I think is great. I mean, I want some free money too, okay? But I think being dependent on the government is really not that good. I know a lot of people will say, oh, it's our money, so they better give it to us. And I feel you, and I understand that, but I also don't think it's safe to depend on anybody, because if they decide to come up with some outlandish rules and you don't like it, but the majority of your money comes from the government, what are you going to do? You either comply or you're going to be hungry, right? That's not good. And on top of that, they're saying they're going to keep on doing this until substantial progress is made, but it's like, if you're the one creating the progress, what do you mean? Okay, they were supposed to temporarily be in the markets back in 2008. They never exited. They attempted to exit in 2015 and sell off some of their assets. I might pop a chart in here just so you can see when they tried to do it, and guess what? It did not work. They had to reverse course, and as you can see, things got nuts after the pandemic, because then they started going crazy, buying up all these assets. And like I said before in the previous video, what will happen when they own it all? Okay, somebody in my comments was like, like socialism, we're gonna be all renters, we're not gonna have any assets of our own, and the government and the Federal Reserve will own it all. I don't know if that's true or not. Like, I like to kind of prepare in a way where it's like, if I'm wrong, I'm still good, and if I'm right, I'm even better. So just keep that in mind. I don't know. I don't think it's safe to have the Federal Reserve owning up all these houses, owning all this commercial property, buying up all these assets with money that they did nothing for, right? They just kind of boom, 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 popped it in a computer. Like, why is there no production necessary, right? Back before the Federal Reserve was created, because it was created in 1913, before then, what was happening, right? I think we were probably fine. Like, people were probably still alive. They still had investments, like, I wasn't there, so I can't speak too much on it, but obviously we was doing things fine without them. When they came in and just kind of create money out of thin air and buy up all our assets, to me, that's concerning. What I could tell you with a pretty high degree of certainty, though, is that if they continue to keep on doing this, it's going to deflate the dollar, okay? So if you're just sitting in cash, if you're just big on saving, I strongly urge you to consider other options, because you're taking a 100% position in, the US dollar, which I think is doing yourself a disservice. You shouldn't keep all your eggs in one basket anywhere at any time, including the US dollar. You can consider having tangible and intangible assets, some sort of mix, but some sort of exit strategy, right? Like, you don't want to just be all in one thing, especially when you're seeing news like this and they're literally telling you in your face, hey, we're going to continue creating money out of nothing, and buying up all your houses. We're going to continue creating money out of nothing and buying up all the commercial property. Why would you hear that and say, all right, well, I'm going to just continue saying $1? No. Every time they create another dollar, they're eroding your purchasing power, okay? They're putting a lot more money in the system, but there was no production to that. They're just buying up everything. When we work hard for our money, we're putting things into the system that people can actually consume, right? So it's like, I'm going to work hard. I'm going to create this bike. Then this person's going to buy the bike. So if I spend my money, whatever, at least I put something into the economy that someone else is going to like eat up and consume, and then I get the money back, right? That's equilibrium, right? We're kind of having an exchange. If I'm the one with all the money and I'm just buying up a whole bunch of stuff, and now, like let's say it's just me and the economy, and I don't want to work. I already have all this free money. Why would I work? Well, then it's like a whole bunch of money and not that many products because there's not much people working in this economy, right? So that's going to be a problem. Then the prices are going to rise because there's so much money chasing just a handful of products. But because they're also printing up all this money or creating all this money, I say printing, but it's mostly electronic. I would say the stock market is going to continue climbing higher too. That's very, very, very stock market positive when they're buying up all these assets, okay? This is going to inflate the stock market in nominal terms. Now, if you adjust it for inflation and this, that, and the third, it might not really be making much moves at all. And I'm going to try to find a chart because I've seen this chart before, but I don't even know where I was looking. But if I can, I'm going to kind of put it in here so you guys can see that in nominal terms, the stock market may have been doing great as far as their performance. But when you really adjust it, it's been flat. Precious metals should also go up because precious metals, and when I say go up, precious metals doesn't really change in price. It just changes relative to the currency, right? So everywhere across the world, depending on what country you're in, gold might be higher or lower. It really just depends on that currency. But if they're going to have a whole bunch of this currency just printed and out of thin air, you should expect to see precious metals climbing also. So, you equipped with this knowledge watching this video, what are you going to do? Let me know in the comments, right? Are you going to just sit in cash and just wait for your money to kind of erode and lose your purchasing power? You guys can see it for yourself because if you're just 20 years old, even if you're 20 years old, you could probably remember back, when you were 12 and your mom would give you money to go to the store and you would buy candy or whatever. That candy is now more money. Are you going to continue keeping your money in a savings account so that when you're 50, 60, you go to use that money and you realize, wow, everything is so expensive, right? So now I thought I was going to save $1 million. But 30 years from now, $1 million might be equivalent to $500,000, right? Can you live off of that for another 20 years? I don't know. Maybe you won't, right? So you have to have different strategies, which is why I have this channel talking about different investments. I asked you guys on my community tab to let me know what you're interested in so I can do some extensive research and present it to you guys, because we need to start thinking about these things actively. And I don't mean just throwing something in a 401k because you're not super active in those things. I mean really being equipped with the knowledge yourself so you can make decisions for your family that make a lot of sense. We must continue to be self-sufficient, okay? I don't know how to farm yet. If anybody else knows how to farm, they want to teach me and help a player. My contact information is in the description. Help me out. But we need to kind of be as self-sufficient as possible, because I just would hate to be in a position where someone who is feeding me is trying to tell me something that I don't want to do, but I have to do it because I can't bite the hand that feeds me, right? But let me know what you guys think about the Federal Reserve. Do you guys think this, there's no way that we can, as America, go down? I know a lot of people tend to think America's this great country, and it is. I'm not going to sit here and lie, right? Because I'm from Belize. I know that country is, it's not as rich. I'm going to go like this because we're saddled in debt. But the point is, obviously, it is a nice country. I'm not going to sit here and play myself. But do you guys think that we're too big to fail? Do you guys think that the Federal Reserve is actually helping us? Or do you feel we're kind of forming an unhealthy dependency on them? Let me know, because I want to hear your thoughts. But that will do it. If you like this video, then please be sure to like this video and share it with your friends. And if you have anything else going on, you know what to do. Go ahead and binge watch me. And until next time, keep your money up.